A question I've been getting a lot lately from my clients as mortgage rates are coming down a little bit is that should I pay off my mortgage? Should I refinance? But let's focus on paying off your mortgage entirely if you have the luxury of doing that. If you ask Oprah, she's going to tell you that you should absolutely, she did say famously that you should try to pay off your mortgage if you can. She said that her wealthiest friends, and I assume she's talking about people that don't enjoy the same type of wealth that she does, but her wealthiest friends are people that have actually paid off their mortgage. There is something truly, putting the financial aside, psychologically satisfying about owning your home outright and not having any obligation to a bank. I myself have enjoyed the amazing experience of paying off a mortgage while I still own the property, not when I sell, because that's a different type of payoff, but only to then take that equity and roll it into our current apartment and then take on even more debt because we bought a bigger apartment. But I did have a window of time where my mortgage was paid off and it actually felt really great. I felt like I was able to save more. I just felt generally overall on top of my finances. Which brings us to the analysis. How do you decide if you're going to pay off your mortgage? Let's talk about rates really quickly. Rates for a 30-year fixed loan are currently around 6%. And if you do a 15-year loan, which a lot of financial advisors strongly recommend because you pay much less interest and much more principal back to yourself during the term of the loan, are in the low fives. So how do you decide from a financial perspective whether you should pay your mortgage off? Well, let's talk about good debt and bad debt. Good mortgage debt is good debt. And the reason it's good debt is because it's deductible. A certain percentage of your mortgage, up to $750,000 of debt, that interest is deductible on your tax return. So if your interest rate is 5%, you're really paying the equivalent of maybe 3% because you're getting a tax deduction for that 5% of interest. So that's good debt. If your mortgage rate is below 4%, or in some instances for people who refinanced or bought around the pandemic, less than 3%, that's great debt and you should not pay it off. You'd be hard pressed to try to beat that number in the market. In other words, you're going to earn much more, conservatively, you're going to earn much more in an outside investment than 3 or 4%. So why pay it off? Use that money, it's cheap money. If you're between 5 and 7%, then it's a little bit more of a gray area because you have to balance everything. You have to decide how much you have in your emergency fund, which most financial advisors tell you that you should have. You might have some upcoming things like college tuitions or even high school tuitions that you have to pay for, or elementary school tuitions in our city. There are different things that you have to factor in about whether you have the luxury of paying off your mortgage. Currently, if your rate is 7% or more, now that rates are down to 6%, a 1% swing is time to refinance your mortgage, because even with closing costs and everything, you're going to be saving so much more money by going from 7% even to 6%, and less if you decide to do a variable loan or a 15-year loan. But there's also a liquidity question, which I just referenced. You have to decide how much liquidity you need and whether paying off your mortgage is right, because then you have equity in your home, which is less accessible than cash or securities, and you may need something on the quick. There's a flip side to that as well, and that is that let's say you have a 6% mortgage. Every time you pay down principal, you're getting the equivalent of a return of 6% on your money, which is guaranteed and fixed. And maybe you can't find that someplace else, or maybe, 6% is good for you. But here's the flip side. If you currently have a 6% mortgage or even more and you pay down principal, every dollar of that principal is now the equivalent of earning 6% guaranteed on that money. That's the flip side. So if you feel like 6% is a good return, then that's all the more reason to pay down principal on your mortgage if that's your rate. At the end of the day, mortgages are math, but homes are emotional. Some people feel much better and sleep better at night debt-free, and some people would rather have the good debt, the mortgage, so that they can put their capital to use elsewhere. Much to consider, and hopefully we have lower mortgage rates in our future, which I think we do in the upcoming year.